Welcome to the CryptoWise channel. My name is Dave. Thanks for tuning in. In today's video, we're going to be talking about Bitcoin. We're going to cover a Bitcoin update. If you're new to the channel, here we focus on macro technical analysis, facts, and charts so you can have clarity and easy decision in the crypto market, laying out highest probabilities based on chart patterns, confluence, and indicators. No news, no hype, no narrative, just cool, calm, and focused. So if you've seen my other videos, my other Bitcoin videos that I've been talking about that March was going to be bearish, I talked about a crash coming. And one before that, I talked about de-risking around 74, 76K before a big crash. And yeah, so I did talk about that, and that was based on confluence factors from the prior cycle where we had repetitive bear flags. So if you've seen that, you would have been informed that we've had in the past downward move from the all-time high, consolidation, move down, consolidation, and another move down. Just basically 3 bear flags until we reached an area of longer consolidation. So, but of course, that's not always how these play out. Sometimes we get little curveballs and, you know, things don't always play out exactly as it seems. Now, we're still macro bearish. I still do believe that we're going to see this box get filled out. It's just a matter of when. It's not if, it's a matter of when. That's still the highest probability. Just because we're getting a little bit of bounce from these lows, then doesn't necessarily mean that we're going to new all-time highs from here. One thing is that we did have this bear flag, and this is why I was pretty bearish, because it looked very similar to the prior consolidation. The timing was also very similar, so it just seemed like we were going to break down and see another leg down. And recently what happened was we did get a breakdown out of the flag, but we just didn't get that follow through and move down. We actually broke back into the channel. In fact, we had some candle closes here inside the channel, and then we broke down, and now we're pushing back into it. So I would say that this bear flag is officially invalidated. Now, so now it just means that it'll just be longer before we move down. All this is still price correct. It's called corrective price action. There isn't anything really bullish. There's one indicator actually that could be giving us a sign that we're going to see some kind of a bounce, and I'll get to that in a moment. So this bear flag's invalidated. We are in the moon cycles, we are in a full moon energy right now. So commonly, the full moon pushes us into the new moon pushes us into the full moon until the structure breaks. So as you can see in the prior consolidation, right, so the blue is new moon and the green is full moon. So we can see the correlation with the cycles that with the moon phases. We very often have full moon pushing us into the new moon pushing us into the full moon. Whether we're going on a massive move to the downside or we're just consolidating, that typically is the thing. New moon down into full moon up into new moon, full moon. So I would expect to see some upwards movement into around mid-April before we see any kind of rejection down. Yeah, so that's one thing to consider is that we also could see yeah, it's a confluence factor I'm looking at. So seeing as how we're being supported here, it looks like we're Wing out here on the shorter time frame. So a W meaning reversal probably into the following week, or for a couple more weeks, for about 10 days. Yeah, so that's what is expected at this point, unless we see a break below this level here at 65,800. if we see a break below that, then that should be the cascading effect that takes us into testing 63K, and then likely break below that, lose 60K, and then cascade down into at least 53K. Yeah. Now we don't have a bear flag necessarily target, but we could look at this as just a consolidation now. So instead of this being a bear flag, it's just a longer consolidation, which is still a bearish price action, right? Unless we break above, very cleanly above 74K, or if we close a weekly candle above 72,800, like a very nice one, then like if we close a weekly candle above this level, this could be a W breakout. Now it would have to push with a lot of volume and a lot of strength. If it just closes a little bit above, it doesn't necessarily mean that we are bottoming here, and I don't think that we're bottoming regardless. Even if we do a W breakout, it could just be a liquidity grab to get the CME gap. So the CME is this chart here. Now, if you're not familiar with the CME, Chicago Mercantile Exchange closes on Friday. Right, you can see at the bottom of the screen, and then reopens on Sunday. And well, this just says Monday because it's the daily Monday. Yeah. So you can see the gap on time at the bottom of the screen. Friday, January 30th. Monday, February 2nd. And what happens is that if the Bitcoin chart continuously runs all the time, but this one, because it closes for a couple of days, if Bitcoin moves and keeps going in the same direction, when it reopens on Sunday, there's a price gap, and those gaps usually get filled very often. I'll show you a couple examples. Here's a gap right here. When we broke out, eventually we came back to fill it. I mean, it took a couple months. We actually had a gap over here when we broke out to all-time highs, and then we actually came back to fill it before we went higher, right? And then see there's a gap here, gets filled, goes up, gap there, gets filled on the way down, gap there, got filled on the way down, gap there, got filled on the way down, gap there, got filled on the way down. So it's possible that we break up to fill this gap before we go lower. So sometimes the gap is made that we're going to fill on the way down. Sometimes the gap is made we're going to catch it before we go lower, or the opposite, we catch it, we fill it before we go up. So I think it would be the inverse of this kind of gap, where it's like, no, we're not going to fill it. You know, when you're really, really bullish and the price is going up very, we broke a new all-time highs, Bitcoin's at 100K, people are bullish, and they're like, it's not going to go back down there. Of course, big move down, fills the gap, and then it goes up. So right now, a lot of people are bearish, actually. So people are like, oh, it's not going to go back up there. Well, it's possible that we see a move up and we go fill this gap, and then we make an M pattern, and then we break down much harder. All right? Very, very possible. So why I think that's possible is because, well, it's also happened before. So if we were to do that here, right? If we were to do that here, well, the CME is right around this wick here. So if I were to measure that, it's like just slightly above the wick. This chart isn't as accurate. It's off by some $100 or so. So it's a bit strange of a way to do it, because you can see the wick here is at, for example, 80,745, and on this chart it's at 80,600. It's about the same. All right, just for sake, we'll just put it here, 8,700. Right, in purple, there's the CME, right? Like this, boom. Right. The thing is if we were to push straight up in 1 week to fill it, we would just tag this weekly downtrend line, and then just enough to probably get rejected off this weekly downtrend. Now, it is possible that we break the weekly downtrend, we push harder, and we go into, let's say, the daily resistance. We could push a little harder into the daily resistance around 80. Actually, let's actually put it on the daily. Yeah, around 85, 84, 350. This would be the ultimate thing to get people really confused. That is actually a very real possibility. I don't think it's too likely. I think there's going to be a lot of resistance around 78K, 76K, but we're so close to that gap at that point, it might just flick up to fill it and then roll over if we get up there. So, and if I extend this line this way now, we actually have a channel like this and a channel. Now it looks more like this now. So it's still an upward sloping channel, right? So all right, so that's a very real possibility. The CME is pretty close to all this resistance. We could just break slightly above, fill it, M out. Everyone thinks that we break out of the downtrend and then it rolls over even harder. There is a situation where that happened before. It happened actually over here back in right here. Now we can see if I zoom in here like this, right? This is a downtrend, okay? Like this, right? Now if you look at this from this perspective, we break out of this downtrend, it's like, holy shit, like we're going up, right? We're going up. The bear market's over, right? Because it's a clear break of the downtrend. But look what happened, right? What did that do? Lower high, M's out, big M pattern, breaks down and goes much lower, right? So this is a very real possibility this can happen. So if I go on the weekly time frame, and we can see that we even had what looks like a weekly W, very similar pattern, right? We have up, down, up, break of the neckline, spend some time above, and then we have that move down, right? Probably came right to the 50% retracement from the swing high to the swing low. Yeah, right there, see? Right to the 0.5 retracement. Very, very common pullback area before going lower. Very common that when a trend is down, we get a downwards trending move, and very common that we get a pullback to the 50% retracement before we actually continue lower, right? That's happened. It's just very common area between 0.5 and the 618. But in this case, 0.5 is what happened here. So, and also understand, well, I'll tell you that, and then I'll show you what's going on here. I mean, it looks very similar, right? We didn't break out of this weekly downtrend though, but if we do, you know, we got this W and we do push into this area, right? We could push higher, right? We could push into this area here. As long as we don't create a higher high, then in my opinion, we're still macro bearish. If we made a higher high, then I would be more bullish, but I don't think we're going to see that. So, just because the timing of cycles, right? The 4-year cycle, right? So we have, what was I going to say? Yeah, the 0.5 fib. So if I do a measurement, swing high to swing low, look at this, where that 0.5 fib is. Right into a lower high, all right? There's your previous high here. And it's right into this, all this resistance. If I go on the 2-day, yeah, we're pushing into all this resistance here. I don't know if we'll get there though. It seems pretty aggressive. I think it'll maybe attempt, if we do break out, I think it'll maybe attempt to get to that 0.5 fib. And then maybe roll over before then, because all this overhead resistance of all these candles. So there you go. there's confluence there. We could break out of this downtrend. That doesn't mean we're going to be bullish all of a sudden, although that'll be very confusing for a lot of people. And another reason why I believe that it would make sense also that we break out is that that would give us a stronger three-wave pattern, which is how things move in the market. All right, it's going to be really confusing to a lot of people because it's going to look bullish for a moment, but really it's just part of the move. So Bitcoin tends to move in these three-wave patterns, and we can see three-wave patterns are corrective movements to the downside. We got 1, 2, 3, three-wave move. Over here we had a three-wave move, 1, 2, and all of this was still part of 2, but the 3 was down here. So right, 1, 2, 3. Right, and then we have, this was also in 3 waves, 1, 2, 3, and it was just consolidation, but the third wave to the downside is usually the most aggressive. So I mean, this kind of looks like we've had 3 already, but we haven't reached the standard area. So I mean, over here, I mean, you can argue that some of these were already 3, right? But it's in the greater context of where Bitcoin likely will reach in terms of a bottom, right? So we're looking at, I don't know if I did my bottom signals video on, I don't think I did. Yeah, it was the 50 EMA on the 2 weekly. No, the 200 EMA. Yeah. So we can see that. Oh, yeah, that'll be interesting. Actually, that's another confluence factor right there. We could go back test the 2 weekly EMA on the 2 weekly 50 EMA. Let's change these colors up here. Let's make this just a little thicker. And then we'll make this one purple, just so they're not the same color. There we go. So we could very well see that 50 EMA get back tested and then we break to the 200. It's common to see those get back tested. We don't typically do it, but we do see this 200 2 weekly EMA get tagged. When we break the 50, we usually get to the 200, right? And the 200 is sitting at around 50K, right? And we haven't seen that yet. So if we close a 2 weekly candle above this EMA, this 50 EMA, then I would say that we're back to being bullish. It would have to be a 2 weekly candle. It can't be a weekly candle because it's a 2 weekly chart and that's how it works. So that's would be my invalidation. If we close a 2 weekly candle above this 50 EMA, then I believe that we're going to be back into bull mode. Until then, this is all just noise, really. And we're still expecting downside. Yeah. And we also have other targets as well too. I think it's the head and shoulders pattern. Did we reach that target? Let's see. That's another thing too. We also have this head and shoulders pattern that we broke down, which is like this. And if I zoom out on the weekly, so that's also going to be overhead resistance. There's so much resistance here. I don't think it's gonna. If we do get up there, it'll just be probably very weak move before we come down. The target out of this head and shoulders is actually. Oops, what did I just do? Let's reverse that. Is actually down here at 53K. So we still have that 53K target to meet at the very least, which would be the top of this box, which is where I'm expecting the Bitcoin price to go to. So we do have some confluence factors in terms of targets. When we look at that, the target of this one here, this was also a kind of head and shoulders pattern. And we measure top to bottom. We actually met it perfectly on the third wave down, which we may actually not have completed yet. So this could be a three-wave move down for a three-wave move up before a larger three-wave move down that makes a larger three-wave move down. It's all three-wave moves. It's all corrective, right? 1, 2, 3. Then we get a 1, 2, 3, and then we get a larger 1, 2, 3 down, which ends up being a 1, 2, 3, right? Very similar to, and like I said, three-wave structures are very corrective. We can see here we have these 1, 2, 3, 4, 5 waves, right? Or 1, 2, 3, 4, 5, right? 5-wave structures are bullish, 3-wave are bearish, right? That's a little bit of Elliott wave stuff, but we can see that we could have something like that too as well, right? See, we look here, if you break it down, 1, 2, 3, 1, 2, 3, right? 1, 2, 3, 1, 2, 3. It's all three waves, right? Three waves, it's all corrective structure. So we could see something like this too as well. You see this weekly candle? We get a W breakout, just a wick, come back down, and then we break lower. This is probably more or less what we're going to see since we're a little bit lower in the price action. Maybe we get just a liquidity push. Everyone goes bullish, and then the market makers take it down. So that could be this week here, actually. Right here, we get a strong push. And then the following week, just a strong push, we come down, we close a little bit lower inside, below 78K, and then we come down the following week around the new moon. So yeah, exploring that possibility. There's also the possibility that we don't really go that high. It's possible we don't. A major area that we could see a rejection is around here at 71,500. If we get a rejection at 71,500, a strong one, we could see it just come back and break down. We could just be chopping around here for a while before it breaks down as well too. Also very possible. So I'm not excluding the fact that we could also not even make it to the top of the range. It's also possible. I'm not sure what the highest probability is at this point in terms of how it's going to play out, but I could say in any case, the highest probability is that we see lower price action, right? In terms of de-risking, I think it's I personally wouldn't be looking to de-risk at this point. I would probably be waiting until we see this move up into the weekly downtrend or the CME. That would be a great place to de-risk if you're planning on taking some money out of the market before it comes down, because you can definitely do that, because history shows that down is way more likely. And you know, historically we see these big moves down, right? Top to bottom, 78% down. Previous cycle, top to bottom, 84% down. Previous cycle, top to bottom, 86% down, 84% down, 78% down. If we even just did 10% less from our swing high in October, that would be 68%, and it would still bring us to 40K. So I get it that our returns in terms of the uptrend in the cycle is less, but the move down in a bear market is also less. So 10% less is actually greater. It's more of a cushion. If I were to do the math, I mean, because this one, 86 to 84 is 2% less. 84 to 78 is 6% less. And 78 to 68 is 10% less. So I'm upping it to 10% less. Even if we were to make it 12% less, you know, 42, 14% less. You know, we're still looking at 45. We're still looking at inside the box, right? So definitely makes a lot of sense. And timing wise too, I mean, the price action needs to consolidate before going lower. One thing also that looks a little bit bullish is the RSI. The RSI, this was a bit of an indicator. I did see it a bit ago. I wasn't giving it too much weight because it wasn't holding, well, it didn't give much of a breakout rather. But these RSI breakouts, so this to me shows me that temporarily we could see some upside. When we see that the RSI breaks out of a downtrend, so you have a touch point, breaks out very slightly, back tests, and now it's pushing higher. So this is a sign that the momentum on the weekly time frame is starting to be a little bit more bullish. Now, normally in the context of an uptrend, when we're in a bull market, this is actually a really bullish sign. But because we're in a massive downtrend and we haven't broke any downtrends, right? We haven't broke our weekly downtrend. We're still macro bearish in terms of structure, right? The context of this breaking out is not that, it doesn't give that much weight due to the fact that our RSI was a lot lower. Sorry, on this case. Yeah, it's just been trending down really hard, and which basically shows us that the momentum is very negative. It's like the momentum's downward. And what could be happening is that we could see a temporary consolidation to the upside on this weekly time frame before we break down lower, right? And the idea is that we haven't been seeing the RSI has been playing out very differently since we've been going higher. We used to get these repetitive bearish divergences and repetitive peak highs before we actually top out and go to a bear market. And we used to have these very big swing highs on the weekly time frame, even in 2020. We did have one here in 2024 when we had our bull market, but that was before we broke the all-time high. After that, we had lower highs. And on the monthly time frame, we actually never even printed a monthly RSI anywhere near the previous cycles, right? So context is important. The reason I'm showing you this is because, well, Dave, if it broke out on the weekly time frame, wouldn't that mean we're going to go up, right? Not necessarily. We can see that the monthly time frame RSI, we didn't have a lot of momentum on the way up. Look at this big swing high, big swing high, big swing high, and look how much lower it is here. All right, it's showing that the strength on the bull market was actually a lot less than the previous ones, which means that momentum's got to go somewhere. If it's down, we could see more of this happen in the RSI, where it consolidates on the downside a lot more, or we get these repetitive swings like this. 1, 2, 3. We could have 1, 2, 3 times before, right? Before we actually go up, right? Very, very possible. So, yeah. Anyways, hopefully that makes sense, guys. Still macro bearish, temporary move to the upside, and still the likelihood that we're going to see a big move to the downside. It just might take a little bit more time. So just be aware that if we break out of this weekly downtrend and we push above 78K, just be aware that the sentiment will likely change very bullish, and that's probably when it will be the most bearish. Okay, so our invalidation of if we're actually going to be in a bull market, the invalidation of the bear market will be the the 2-weekly 50 EMA. This, if we close a 2-weekly candle above this, which surprisingly, look, is above the CME. So we could go and actually tag this line and then continue down. Also possible. Okay. So there we have it. Hopefully that's helpful, guys. If you find this helpful, please share the video, like, subscribe, and I'll see you in the next video. Peace.